So I guess
Yeah,
assuming that people listening to this don't have 20 to 30 million kind of in investable assets to manage, maybe they have half a million, a million, right? And they're like, okay, maybe they had an event, right? Maybe they sold a business and they, got a check for $1 million. How do you think
yeah.
about kind of diversification of that? And then what type of assets are you looking at? And maybe let's kind of dig into the real estate side, because that's mainly where I tread.
Sure.
You mentioned kind of single family, you mentioned that you did fix and flips, and that was kind of probably earlier in the journey, but yeah, where are you thinking about kind of the opportunities are in the real estate world?
Yeah, and it's a great question, and I can answer it from a family office standpoint. And then just remember that I invest my own money
Yeah.
as well. Yeah, and so I still do fix and flips. I've got a wholesaler who calls me twice a week with deals, and we go look at every single one of them. And they may be a $55,000 deal, but if I can take and flip that thing, or if I can double wholesale it or something like that, and put 10 grand in my pocket for making a phone call, I will do that all the time. I'm a deal hustler. I love my deal anyway. So if I was in that situation where I had those things, the first thing that you mentioned 401k is I don't like qualified money. So I can always do better than the government can mandate me to do. So I get it out of a 401k or any of the qualified money as soon as I can. And your financial planner may have a completely different opinion on that. If I can't do that, then I definitely want to get it into a self-directed
Yeah.
vehicle. And so I have one. I will only set those up in my businesses where they're self-directed for my employees and associates. And then you can buy the right things. And I'm a huge proponent of single family and small multifamily right now. Big multifamily is in jeopardy in a way that, just because of the rising interest rates, has put a
Yeah.
cramp on a lot of those projects, which I'm in with some people that you and I know together. So yeah, it's a single family home place. I just talked to a guy this week who's in the Rio Grande Valley, and
Yep.
he can go put up a house, suitable for rent or sale for about 200,000 bucks. And if you deploy that 200,000 bucks, and you can generate, he's renting those for 1850 a month.
Wow.
So, I mean, that's a great return on new construction build at this point, because, people will say, well, inventory has doubled in the past year. Yeah, it's doubled to, one of the lowest rates that it's ever been in the history of the country.
Yeah.
And that is going to keep prices stabilized, even in the face of an insane, Fed adjusting the curve that way. So it's a very wordy way to say I still like the single family home market. I love the buy and rent. I love the idea that we know that inflation's at whatever they lie and say that it is, at 9% today. But what that means is you can get somebody else to pay you for an asset that's going to increase at least in pace with inflation. There is no better investment for that. Plus, you get the tax benefits, plus, you get cash flow. There's no better investment out there than that.
Yeah, well, and also it's an affordability issue, right? Like, a lot of the houses that are being built are not affordable to the average, normal American, worker, right? So they're still in that renting game, especially as you're hearing all of these big institutional investors are buying up a lot of the affordable housing to rent them back to, people, right? So it's just going to continue
That's
to
right.
increase the
Continue to
rent, and
increase.
the prices of these homes, because they're going to be able to pay more than what you would as a fix and flipper, because they don't need the returns necessarily as much as you do, right? Um, so I guess,
That's exactly right. And again, it's other people's money, right? It's the
yeah,
fact that somebody else is going to pay me to get the benefits of having cash flow and tax advantages. And then I can probably sell it anytime I want to sell it. I'll tell you, one of the strategies that we've employed in the past 12 months is we had about 162 rental homes as a family that we were holding. And we have approached every one of those tenants, who are all long-term tenants, at protected interest, rates. They have very good rents because we haven't raised them as we should over time. We've gone to them and said, look, we'll sell it to you, but we'll take the note back on it, because
mm,
I don't want to be in the landlord business and the shower curtain rod broke, or the oven isn't working, or the tree fell down, as much as I want to be holding a capital asset. And
yeah,
so I'm giving up some of the appreciation on those houses. I know that, but I'm also simplifying life, that I just have to collect, a single payment for a note. So we've converted about 50% of that January 1st, we'll convert about 50% of that block to just held notes instead of landlord based hold to rent.